AI. AI KOSPI. KPI. AI. KOSPI KPIF. KPI. AII. /CH. N. Good evening, everyone. Today's global markets presented a complex picture, marked by extreme divergence and contradictions. U.S. major indices closed with modest gains. The Nasdaq advanced 0.1% to close at 26,274.13, while both the S&P 500 and the Dow Jones Industrial Average rose 0.19%, settling at 7,412.84 and 49,704.47 respectively. However, beneath this seemingly calm surface, significant undercurrents were at play. The VIX Volatility Index saw a substantial jump of 6.98%, closing at 18.38, and the 10-year U.S. Treasury yield climbed 1.05% to 4.41%. The U.S. Dollar Index, DXY, edged down 0.2% to 97.90. In terms of capital flows, today's market focus was highly concentrated. A large volume of funds poured into AI-driven technology growth stocks, with this enthusiasm temporarily overshadowing potential reversal signals in the broader market. Concurrently, some capital, driven by concerns over geopolitical tensions and inflation, flowed into the traditional safe haven asset, gold. Spot gold prices rose 1.58% to $4,761 per ounce. For crude oil, WTI crude fell 1.78% to $98.16 per barrel, yet it remains at elevated levels. Let's review the global market performance. Asian markets today showed severe divergence. Notably, South Korea's KOSPI index surged a remarkable 4.32% to a new historical high, propelled by semiconductor giants like SK Hynix and Samsung. This powerfully demonstrated the immense momentum of the global AI investment craze. The Korean market independently absorbed and amplified global AI optimism, marking a significant structural turning point that confirmed AI as the strongest main theme, independent of the broader macro environment. In stark contrast, Japan's Nikkei index and Hong Kong's Hang Seng index both closed lower, dragged down by Middle East tensions and rising oil prices. China's A-share market, however, saw a strong start, with the Chi-Next index performing particularly robustly. Moving to European markets, most major indices closed lower, reflecting a generally cautious sentiment. Germany's DAX index posted a slight gain, but its defense stocks experienced a sharp pullback following remarks from Russian President Putin. European markets failed to fully embrace the AI frenzy seen in Asia, instead largely grappling with their own geopolitical risks, maintaining a cautious, volatile pattern. Finally, the U.S. market. All three major indices, indeed, reached new historical highs, fueled by AI technology stocks. Yet, as we mentioned earlier, the VIX Fear Index and the 10-year U.S. Treasury yield simultaneously rose significantly. This is a highly unusual divergent signal. It suggests that while market sentiment appears euphoric on the surface, it is profoundly fragile underneath. Funds are chasing a few tech leaders, but at the same time, they are hedging against tail risks through the VIX and bond markets. The U.S. market fully embraced and amplified the global AI tech stock optimism, pushing it to a climax, but the simultaneous rise in prices and risk indicators points to a potential vulnerability turning point in the making.